All right, today we are diving deep into the latest earnings season for comms and marketing tech. And let me tell you, there is a lot going on. We're talking about AI completely changing the game and a huge shift across the entire industry towards, actually making a profit. So let's get into it.
So this quote really nails it, right? AI has once again turned voice into both the medium and the app. This is hands down the biggest story this quarter. AI isn't just a nice-to-have feature anymore. No, it's becoming the product, the main event, especially when we're talking about voice.
And that's a perfect lead into our first big trend. Look, AI has finally graduated from just being a buzzword to being a real direct driver of revenue. We're not talking about a simple add-on here. For a lot of these companies, AI is becoming the main reason customers are buying their stuff. And you know who shows this best? Bandwidth. They are the perfect example.
Whoa. Okay, just look at this number for a second. 3 to 4 times. That is the raw power we're talking about. For every single call that has AI layered on top, Bandwidth is making 3 to 4 times more money than a plain old standard call. I mean, that's not just a little bump, right? That's a total game changer for their business model. So how are they actually doing that?
Well, think about it like this. A single conversation, maybe just a minute long, suddenly becomes this hub of activity. While you're on the phone, AI is working in the background doing a bunch of things at once. It's transcribing everything, it's figuring out if the customer is happy or upset, it's checking for any signs of fraud, and boom, the second you hang up, there's a neat summary waiting for you. It basically takes a simple phone call and turns it into this incredibly rich, valuable piece of data.
And make no mistake, this is not just a Bandwidth story. This is a wave washing over the entire industry. You've got Sinch, who's basically building the roads for AI agents to talk to each other. You've got Braze, using AI to turn their own marketers into, well, strategic orchestrators. Then there's CM.com, their new AI platform Halo, is seeing something like 30% growth every month. And Twilio, they're already signing massive, 7-figure deals with these brand new, built-from-the-ground-up AI startups. So all this talk about new tech is the perfect setup for our next big topic. And that is the huge, but let's be honest, kind of complicated, rise of RCS.
Okay, so for anyone who's not deep in the weeds on this, what is RCS? Think of it as SMS 2.0, or maybe SMS on steroids. That's a good way to put it. It takes that plain old text message and just completely transforms it into something that feels more like a modern app. You get rich media, carousels, your own branding. You can see when someone's read your message, all that good stuff.
And believe me, when I say it's taking off, I mean it. The numbers this quarter were kinda nuts. Sinch, they handled almost 800 million RCS messages. That's up 27% from just last quarter. Link Mobility saw their volume grow by 4 times. And Twilio, they're calling it a once-in-a-generation opportunity. So yeah, the traffic is absolutely exploding.
Okay, so there's gotta be a catch, right? And there is. Even with all this insane volume, nobody's really figured out how to make serious money from it yet. It's still foggy. We're even hearing that some providers, like Sinch, might be just giving basic RCS away for free, just to get customers on board and used to the tech.
And then there's the big one, the elephant in the room, Apple. When are they finally going to join the party? That is the million-dollar question, isn't it? Because until RCS works seamlessly on iPhones, it just can't be that universal go-to channel that businesses are hoping for.
So you have all this excitement, right? AI, RCS, all this shiny new tech. But underneath all that, something else, something really fundamental, is changing. And that's the strategy. The focus has completely shifted away from just growth to something a lot more disciplined. We're talking about profitability.
Yeah, that whole growth at all costs era, it's over. Done. And it kind of had to be. If you're going to pour a ton of money into something like AI, you need a ton of money. So that's forced everyone to get a lot smarter, a lot more calculated. The new playbook is all about healthy margins and strong, predictable cash. And Link Mobility's acquisition strategy? It's the perfect example of this in action.
So what Link is doing is actually really smart. They're not going after those flashy, high-risk startups that are burning through cash. Nope. They're systematically buying up solid, stable, local companies, paying a really disciplined price for them, and then just folding them into the mothership. The result? This incredibly resilient, cash-generating machine. I love how one source put it. They said, Link wears it like armor. Their discipline is literally their superpower.
Now, Sinch is on a similar mission, but they're taking a slightly different road. You could say they're in training mode, getting lean and mean. They've hit pause on buying new companies, they're paying down their debt, that's what leverage is, and get this, they're using their extra cash to buy back their own stock. That is a huge vote of confidence in themselves.
Okay, so we've got all this action, right? New tech, new strategies. So the big question is, what did Wall Street think? How did the market react to all of this? And the answer tells a really, really fascinating story about what investors are actually looking for right now.
Well, it was definitely a mixed bag. It was kind of a tale of two markets, really. Pretty much everyone had a solid quarter, but investors did not treat them all the same. Not by a long shot. Good news for one company didn't mean good news for its stock price.
And this is where you can really see what the market is thinking. So this table shows a company's valuation, right? How much it's worth compared to its sales. And you see this clear split. On one side, you've got these top-tier software companies, Twilio and Klaviyo. They're doing well, but their stocks got hit by this general downer mood about software, the software penalty. But then on the other side, you have Sinch, and the market loved their steady, profitable approach. And then there's Bandwidth, which is just a total puzzle. The stock price seems completely disconnected from how well they're actually doing.
But if there was one clear winner this quarter, it was Link Mobility. No question. A 35% jump in their market cap? Wow, that sends an unmistakable message. In today's world, investors want that disciplined, predictable, cash-generating business. They're choosing that over the promise of maybe, someday, high growth.
All right, let's zoom out. Let's pull all these threads together and figure out what this all means for what's coming next in this space.
So, what are the big takeaways? First, AI isn't just a feature. It's the new app. It's a moneymaker. Second, RCS is real and it's huge, but the monetization is still a big question mark. Third, profit is king. The focus is squarely on margins and cash. And finally, it all comes down to execution. The market is rewarding the smart, disciplined players over the growth at all costs crowd. We're literally watching an industry grow up right in front of us.
And that leaves us with one last big thought to chew on. This quote about AI creating an iPhone-like moment for voice, it's powerful. Because what we're seeing, it isn't just a small change. It feels like something much, much bigger. What happens when AI is embedded in every single interaction, every call, every message? We might not just be watching a business model change. We might be watching the very nature of communication get reinvented.